All right. Okay. Good evening, everyone. Welcome to the new week. Okay. So, as usual, we'll run through the markets over here and highlight some of the key opportunities available. And of course, if you guys have any questions, feel free to put it into the chat. We'll be answering any questions that you guys have, as well as if there's any particular instruments that you'd like me to go through, feel free to just put it into the chat as well. Okay. Good. So let's get started. I think what I'll do over here, just very quickly bring this up, to have a reference point, right? So this week here, we do have some important rate statement data. Of course, Australia here has been done this morning. Going into Thursday, we do have the Bank of England. Okay. So of course that means if we're gonna be trading related to the pound, just bear in mind on the potential volatility, and of course, on Friday we do have the Canadian labor market data, as well as the NFP, right, first Friday of the month. Yeah. So with that in mind, again, that means that the dollar pass would likely be a little bit slower building into NFP. Usually, that's how it is. As traders are just basically waiting for the data to be released. Okay. So just have all this in mind as we are approaching the week, looking at opportunities. Okay. So let's start off with the euro dollar. Okay, so I think overall euro dollar, we can see on a 4-hour time frame, it's clearly in a downward trend in a way. If I bring you to the daily time frame, what this opens up the possibility is the fact that this can actually come back down and tag this low. And that would potentially open up what we know as a expanding flat kind of structure for further upside, right? So of course, we are looking at a daily in this scale, so things are gonna take a little while for it to develop. But at least in the near term, again, what I define by near term here is we're looking at 1 to 2 weeks time, right? So just be clear on that. We are looking at a possibility where it can continue further lower, okay, towards like 1.1350. And of course, right now we are kind of testing that extension of 618, right? So from Elliott wave Fibonacci measurement, you can very clearly see the structure right now, right? You have the black WXY, we have the market push up, so this forms the blue W, this forms the blue X, and then we have that internal WXY as well, coming very nicely towards the 618. So again, this is the expectation where we can then anticipate price will pull back a little bit. Okay, and if it's going to be pulling back correctively, then that opens up the opportunity to look for sell trade, and then the target, as I mentioned, is at 1.1350. Right. So we'll see. We'll need to give it a little bit of time. What would potentially be the case here is that NFP might be weak for the dollar, and then of course, if that's going to be the case, we will likely see some sort of a rejection on euro dollar back to the upside, and then that will build in that pullback state, right? Now, obviously, what can develop here going into Friday as well, that this can continue to just consolidate a little bit into a cross structure, which would then indicate the possibility of, again, dollar weakness on NFP, as catalyst. Right. But I think right now it's just a little bit too early to really consider any trade setup. Simply because the price is currently still pushing lower, right? And oftentimes when this is happening, we just need to be a little bit patient on it. Okay. Similar thing here in GBP USD, right? Again, going on a high time frame, you can see that price is currently breaking that low. So again, this possibly would build in a very nice tree wave WXY, right? Again, if I kind of like just very quickly update the degree to make it a little bit more accurate, okay, in terms of the degree of the labels. This is something we can look out for, right? Of course, again, you can see price is still pushing down pretty impulsively, at least on the 4-hour time frame. It's still coming down, right? So I think right now, again, at this juncture, there's really no clear setup that we want to spend too much time kind of like looking into that, right? Um, but yeah, so we'll just leave this aside, at least for now, until we'll see after the Bank of England plus maybe the NFP, then we'll come back on the pound dollar side of things. Okay. Aussie dollar came down. Okay. Kind of testing the 618. We want to really see how this is gonna react off it. Right. We do have the RBA today as well. That of course building into NFP on Friday. So this one here, we're testing the key level, so we'll just need to be patient for now. Okay. Oftentimes when the market comes to the key level, that is where we can't expect some sort of a reaction, but doesn't necessarily mean we're definitely gonna get something out of it, right? It's more of like that's the point of interest. We want to pay attention when the market is coming in. And of course, we still need to see the setup that we want when the market is at a key area. Okay. So Aussie dollar, the expectation of this is, of course, if we can get some sort of a rejection back up, then that opens up the possibility of one more push to give us that 1, 2, 3, right? Then we can capitalize on that move to the upside, okay? But at this very moment, again, it's a patience game. We just want to be patient on this, right? In fact, most of the major pairs, you just be a little bit patient on it as of now, okay? Dollar CAD is pretty solid, right? I did not trade to the upside, but I'm not sure how many of you actually managed to capitalize on this push to the upside, right? Because a couple of weeks back, right? In fact, like 2 weeks back, we're looking at the sell, and then we're kind of looking at short-term targets, and then this becomes also the secondary target, right? Extended target that you can aim for, and then we'll talk about how if price comes back to this territory, you'll be expecting some sort of pushback up. Because from a wave perspective, we have 5 wave. This is a pullback. Very classical 5 wave kind of pullback, in a way, right? Because if you take a look at the details of this, okay, we came down in 3 waves, where the price came back down towards where the previous wave 4 territory is, okay. So again, this is a typical kind of like 5 wave up, 3 wave down. Oftentimes, we'll probably look at somewhere near where wave 4 is, and of course, if you take in that FIBS, right, from swing low to swing high, that is where that 50% mark is, right? That's where the 50% mark. So very classic, kind of a model of a 5 wave up, 3 wave pullback, and then very nice little reaction. Okay, I did not manage to kind of capitalize on this because this leg to the upside is technically just impulsive push to the upside, and then there's really no setup that allowed me to get involved in, right? So if you're not in this buy, it's fine, right? We're not gonna be forcing anything from the market, and we just wait for the next one, okay? So dollar Canadian here, we're basically waiting for a pullback, okay? We're gonna be bullish bias, and if we can get a corrective pullback, that's where the opportunity is gonna be. And again, whenever I share about this kind of pullback, right, it's you want to think of it as short term. We can trade a retracement, right? If again the conditions fulfill, we can trade the sell side as part of a pullback trade, and then when the market completes its corrective pullback, then we can then rotate and start to look for the buy. Okay, so obviously if you're a little bit more conservative, then you just wait for the pullback to complete and just look for the buy, and you'll be trading, in line with the overarching trend. Okay, so just have that in mind whenever we talk about the expectation where price would likely pull back, right? You don't want to be too fixated that, you need to just wait for the pullback to complete, then only you can start looking for opportunities. Sometimes when the conditions are fulfilled, you can even consider like trading the pullback, right? Of course, that's what we consider more of like a counter trend kind of setup, but it's still pretty valid, right? Some of the trades we kind of look at that. In fact, like the example of this trade here, we are literally trading the pullback, okay? Then we have dollar yen. So dollar yen is something very interesting because looking at this structure here, there is a good possibility we might get a setup this week. But of course, bear in mind, we do have the NFP on Friday as well, and then this is dollar yen, so dollar is involved. But there is a nice little opportunity that we can look to sell it, okay, with the kind of a target towards like 151.90. Okay, and this would then be a very, very nice little potential X wave, something like this, right? And then that will complete the bigger cycle of a WXY. Okay, if I can put the labels in. All right, so that's the expectation of things, right? If you go to the lower time frame, you have some of these conditions are building up, right? Obviously, you can see here triple top formation, so obviously that's a liquidity sweep. We have this neckline here broken as well, right? So you have this low taken out as well. We don't have a very clear fair value gap kind of condition. You do have a little bit here, but it's pretty close to the top. So that's one thing that's lacking in terms of like the setup conditions. But overall, this still looks pretty impulsive as of now, right? So again, I don't need a perfect setup conditions, but it's more like the more it is, of course, the more confident it is. But it's still technically a valid trade that we can look into. Okay. The only conditions right now that I'm waiting for, of course, is price is still pretty much near the bottom, right? We want to see if we can start really doing a pullback maybe by tomorrow morning. That can be an opportunity, and of course, also factoring in mind that there is an FP, right? So I'm just considering on. I mean, today we don't need to make that decision, obviously, but those are some of the additional confluences or contacts that I need to be aware of. Okay. Yeah. So I think Effin here kind of drop a comment and say that UJ has a divergence on the H4 as well. Yeah. I mean, typically when there is some sort of a topish formation, oftentimes there will be some sort of a confluence factor in terms of divergences happening, right? Yeah, so this is something definitely you want to keep an eye on, right, in your watch list for this week. Then moving on is gold. Okay, so gold here hasn't been moving quite a lot for the past 1 to 2 weeks after that massive pullback. So moving forward, this expectation is still pretty much the same. We are expecting some sort of a corrective pullback towards 4,130 to 4,002. If we're going to see a corrective pullback, then obviously we're going to expect the push one more wave down, right? So then that will complete that 1, 2, 3. Okay. To be honest, I'm not so keen in looking to buy it up here because looking at things here, this is pretty much very, very corrective in nature. Not something I'm very comfortable in trading that pullback trade, right? If the entire leg of the pullback is just going to be very, very corrective, then I would rather just wait for the correction to complete, then only start taking trades, okay? So yeah, nothing much on gold to be very honest, but silver here might present something pretty interesting. Again, this might build into a very classic wave structure where you have that internal 1, 2, 3, 4, 5 in orange. And then right now it seems like the market is building into a 3-wave pullback for the bigger B wave. And then after that, this might come back down in 5 to complete that C, and then the bigger move back up. So right now here we are looking at the possibility of a 3-wave move to complete the B wave. And on the lower time frame, if I bring you to the hourly here, we might get a setup, right? So you can see here we do have some conditions fulfilled, right? You have that liquidity sweep, you have the change of corrector over here. We don't really have a very obvious impulse fair value gap kind of take. There is this little fair value gap here. But I think what's clearer is we do have this order block, okay? Where you can see the market actually make a push, take a very, very small little rest, and then it starts going, right? So, and this order block kind of like very, very nicely aligned with the 67. Okay, so I'm pretty much taking just that zone as a part of a factor confluence. Okay? And then, of course, what I like about this is this pullback to the downside seems pretty corrective overall. Okay, and of course, this low can be serving as some sort of a minor internal liquidity, right? So this is potentially one of the setup that I'll be interested to take. Perhaps, you know, as a pending order, we'll set it tomorrow. And just bear in mind on a hard time frame, you know, this is literally just trading that pullback. Okay. So obviously our target can be set at this swing high here, which is gonna put us around like 49.25. But we can also consider to go for extended target. But again, if it's gonna be more of a retracement trade, oftentimes I would be more comfortable just to take full profit off the first target, right? Because the first target here often would just present itself as 1:2, which is already more than enough, right? Sometimes we can have the opportunity to go for 1:3, 1:4, right? But again, the context of things, you just want to include that in. Right, so that's on silver, and we then also have crude oil, which this just literally just happened like 4 hours. Okay, so this also starts to open up the possibility that we can potentially look for a short-term sell. Okay, later I'll bring you to the hourly, then becomes a little bit clearer. Where we can then target the 50 and 618, right? And then the expectation of this is a simple three-wave kind of a pullback. Okay, so short-term potentially sell here towards the 50 and 618 area, then we can look to buy it, right? So if I show you on an hourly, it's not the best, but essentially we can see a little bit of a liquidity here. We have this little change of character. Not the best fair value gap available. Okay, but if this kind of gives us a corrective pullback, that opens up a sell as well, right? So this is your 1, 2, 3. Hey, that's what we're seeing on the higher time frame. Yeah. So again, we're very near the bottom as of today. So really need to just give it until maybe tomorrow morning and see how things are going to develop. Then, you know, whether we have a setup or we'll prefer to just wait out. Or if it's not going to be worthwhile, then, you know, we'll just wait for the potential buy if price comes back towards the key level. Okay, so there are a few things that we still need to observe how price is going to develop going into tomorrow. Right, so that's the take on the crude oil. Then we have S&P 500, right? So basically, the market is pulling back towards the 50% mark. Again, I'm not gonna be bearish on this, right? I still strongly believe that the equities will end off at a high going into end of this year, even in fact going into next year. I think equities are generally still bullish, right? There's no real reason for the US market to go into a bear mode, you know, at least for now, unless, you know, some very, very major things happen in the financial markets or in the world, right? But as of now, there's really nothing that is gonna be giving us that reason to be like selling off. Okay, so what you can then expect is I would say if this were to just pull back a little bit deeper, right? So since it's already tagging at 50%, right, we'll just readjust a little bit. So if this were to just pull back a little bit deeper, we do have some confluences there as well. Whether this is gonna be doing a three-wave development or this is all it is, and then the market starts going up. To be very honest, obviously nobody would know. But the idea here is we're bullish buyers and we're waiting for a buy trade setup, right? But at this very moment, obviously there's no buy trade setup, right? Based on the setup and the strategy that I personally use, right? But of course, if you have slightly different techniques to get involved in the trade, by all means, right? So the directional bias is pretty clear for generally the US market, right? So if you're looking at S&P, this is what we're looking at. If you're looking at NASDAQ, generally it's pretty much the same. We're looking at upside. Okay. Then we have the pound yen. We are expecting that three wave. I was initially expecting this to take out that high before that drop, which might give us the opportunity to sell as a sell trade setup, but market didn't really break that and just kind of came down impulsively today, right? So with this kind of development, if we can get a corrective pullback, technically we still have some room where we can expect the market to move lower. But the details of things here is I'm not like gonna be super convicted in that sell, right? The reason I'm gonna share with you is that you can observe that this low has been broken, or I would say not broken, but tested once, failed, and it's testing it another time. Okay. So from an Elliott wave perspective, we do have the fib expectation, which is a 1:1 of a ratio. However, not all the time we need to understand that it doesn't mean that the market needs to complete the 1:1. But what's the bare minimum for a 3-wave expectation is for the market to hit 1, 2, and 3, as long as it takes out the previous low. Okay, doesn't need to close, it just tag it. Technically, it can be considered as a 3-wave move completion, right? So that's the context I'm building in, where if we have potentially completed a 3-wave but haven't tagged the 100%, sometimes I'll be reluctant to sell it here, because I understand that what can happen is the market doesn't need to go lower anymore, because it can be completed. It could have completed its 3-wave move. Okay, so that's the details that I'm looking at right now. But of course, we are still very, very near the bottom right now. We really want to see how price is going to develop again from here, right? Because this is basically an impulse leg as of today. Okay, but I just want to kind of cover on this little details, because if you're going to apply this technique in your own trading, then that little details might help. Okay, so that's the take on the pound yen. Then we have the odd yen. So odd yen over here, we can see that again pretty similar. We have that impulse leg, right? So short term here, we're kind of expecting that pullback phase to kickstart itself, right? Which means that short term we can look at the possibility of a move lower. Okay, so we have taken out this high here, but then again didn't really go very far. So that, and then this little impulse leg can suggest that, all right, we're probably going to see some sort of a pullback towards like 98.7, 98.5. And that opens up the opportunity, right? But of course, if you again go down to the lower time frame, price is basically trading very, very close to the bottom right now. So you just want to wait, right? We're going to wait for that sign of a pullback. Okay, then that's where we start to look for conditions. Okay, so I think looking at this here, we do have a little bit here and there. This would obviously be our other block, right? Do have a little bit of fair value gap here as an impulse leg. Not the clearest sweep of liquidity, but to be honest, this part here, can be considered as it. And then of course you can see lows have been taken out, right? The conditions are there, right? So the only aspect that I'm waiting right now is sign of the pullback, so that we can start measuring our fibs, and then we'll look out for the setup, get involved in. Okay, so there are definitely a couple of things that you can add it into your watch list for the week. Okay, GBP AUD, this would be something that I would just put it aside. Be honest, this pair hasn't given us a lot of opportunities to trade. When it does, it's not the cleanest one. Yeah, but this pair is here because I just want to have some sort of a cross pair. But maybe if things are not just gonna improve on the pound odd side of things, I might decide to take this pair out and maybe replace it with another pair. Maybe I was thinking like maybe Euro Canadian. Okay. Yeah, but we'll see. Okay, but in any case, the cross pair sometimes may not be the best pair to be trading anyway, right? So we'll see. But generally, pound odd, there's nothing much as of now. Okay. We had this impulsive leg, but we need to wait for the pullback to look for a sell. Okay. Then back to Bitcoin. So BTC over here is kind of like in the consolidation phase. which I kind of updated last week as well. During this kind of structure here, there's really nothing that you want to be actively trading on, right? If price actually, I mean, looking at things here, there's a very high possibility price will just take out that, potentially forming some sort of a bottom kind of structure, right? Which can be also a potential fake break. So if you're looking at long term position, okay, the 102,000 level might be another level you want to consider like adding in. Okay, we have one position here as a long term, right? This is another one you can consider. Okay, just bear in mind that when I mean long term position here, we're not looking at like 1 or 2 weeks, right? We're looking at kind of like quite similar to the idea of an investment, right? Which means you're gonna not have a leverage position on it. You're gonna use cash to buy into the position, and you basically are gonna be prepared holding it for like months to even maybe a year, to see that substantial returns, right? But obviously, Bitcoin here doesn't provide you with dividends, so you also want to then consider how you're gonna allocate your portfolio percentage, because things that you invest in, if there's no dividends, then you need to also consider opportunity cost, right? Because if you're gonna invest like, let's say, a percentage of portfolio into it, even in gold, right? Because gold doesn't, or GLD, right, doesn't provide you with dividends. So that's where the opportunity cost is. So you also want to factor in the cost of time, where you could have then utilized this percentage of allocation to something else that might generate a little bit more, right? So you want to consider all these things in place, right? For me, the crypto side of things in my portfolio is just so small that um it's probably not even 1% of it. Okay, but I'm just being involved in it so that at least can keep track of like how is price development in the crypto, not the entire crypto, but basically just Bitcoin side of things, right? Yeah. So hopefully that kind of give you an idea on it as well. Okay. Yeah. So kind of like do a quick summary on the pairs that I think is worth looking at this week, at least from my kind of list. Will be the dollar yen, silver, we'll say crude oil here as well, right? Which we covered, and then of course alt yen. Okay, so those are some of the things that I think is worth paying a little bit more attention this week. Good. Okay, so I see there are a couple of pairs here. Irene is asking about euro, then William here is asking about Aussie Kiwi, right? So let's take a look at the euro odd. Okay, you look at a higher time frame perspective. Okay, I would say euro odd at this moment, kind of in a crossroad. Okay, because you can see here, the daily structure. Even on a 4 hour, we have this triple bottom, right? But then on the daily structure, we also have this topish area. Okay. What I mean by a crossroad is basically a point where you want to wait for price to give you that confirmation before deciding, right? So what I mean by that is this here is a bottoming formation, right? But it's a little bit early because price hasn't really confidently take out this high, right? If it does, then obviously we can expect the push to the upside, but it hasn't. So what can then develop here is this can just simply be a corrective pullback of a reaction of this area, and then the market can then break. Okay. So what I mean by crossroad is essentially you wait out for a little bit while to see what is gonna develop next. Okay. So if price were to break out of this high with momentum, the corrective pullback would present the opportunity to look for the upside towards this zone. Right? Obviously, if you are more conservative, then this zone will be the one. However, if we don't get that impulsive break, which is something like what's happening now, the market came back down, goes back up, and it forms something sort of a corrective move, then you'll be kind of more or less expecting the lows to be broken. Okay. Now, if the lows were to be broken, then this will build into a 1, 2 liquidity sweep. This would then go towards this low here. Okay. So we are in the middle of this daily range, right? So one or two things would likely happen as I described, either bounce back up, maybe coming towards this area, or even going up to this area, or we're gonna go down. Okay. So what we need is we want to then observe on the lower time frame on the H4, right? Which kind of a structure would price develop going maybe into the next 1 or 2 days, and that would give you a clearer roadmap, into like moving forward. Do you focus on the up or downside? All right. So that's my take on Euro Odd. Let's take a look at the Aussie New Zealand. Oh, okay. So Aussie New Zealand on the daily is kind of like this stretches all the way back in 2022, right? Which is pretty long back, but it's still going to be acting as some sort of a significant area. Yeah, so we'll again this is quite similar to Euro Odd in terms of when price is at a point of interest, is essentially at a crossroad. To me, it's not, at least from a risk versus reward kind of perspective, right? When we are at a major high like that, oftentimes I'm more inclined to be focusing on the reversal side of things, because the risk versus the reward ratio is going to be more significant in the reward side of things if you're going to focus on the reversal, because we're already near the top. Unless the market gives us a very, very clean break, then we'll be looking at maybe extending it all-time high and things like that. But the first kind of like anticipation whenever we come into some sort of a very major high or very major low is I'm more inclined to look for that reversal sign, right? So for me, then Aussie New Zealand here will be more of like, can we get a crawl that shows us some sort of reversal and then a impulsive leg to confirm that, and then we'll start to look for that. Even if it's just going to pull back here, that's a potential opportunity. Or is it going to be a major, major reversal, right? So that's going to be my initial point of focus, okay? At least for Aussie New Zealand over here. But right now it's a little bit early to kind of like do that because there's really no sign of a reversal yet. Okay. So again, what is a sign of reversal? As I've just pointed out, right? If you kind of form a crawl and then you have that confirmation of an impulsive leg followed by a corrective pullback, that would be your sell, right? Again, we are not looking to capitalize on this. We're more like looking to capitalize on this. So there are a few pieces that needs to come together. Okay. So that's the take on it. Good. So I see another question over here. How can we trade a reversal? Would it be confirmation? What would be the confirmation we should look for? Let's assume dollar franc. Okay. You go over to dollar franc. Okay. So this is the analysis on dollar franc so far, right? I would say if you're gonna use dollar franc as an example of looking for a reversal, okay. So obviously there are a few components that I will look into, right? The first thing here is some simple fib expectation, right? So if this is gonna be a three-wave move, right? We do have some fib expectation, which means that's our point of interest, right? We are expecting price to go towards this area. We're expecting price to have some sort of a reaction when it reaches this area, okay? Now, obviously, the aggressive way of it is just execute a trade when it hits that zone, and then, of course, with a stop above, right? But if you would love to be more conservative and kind of wait for, sign of confirmation, I usually, number one, wait for some sort of a pattern, okay? So a reversal pattern that I often look out for is what we call a crawl, which is essentially a wedge or the diagonal, okay? if a wedge or a diagonal or a crawl pattern basically emerge around the key area, it's the first clue. Okay, now can we trade this pattern directly? Yes, right? You can use a stop order or breakout order to get involved in it. I would say previously I just do that, right? And I realized that sometimes we get kind of like into a position, but then it's not a genuine kind of reversal. But sometimes it's a very, very beautiful reversal, right? So again, there's no perfection of things. But then I realized that what I'm more comfortable right now is to wait for the extra layer of confirmation when the market make a impulsive move in the opposite direction, right? So you get a crawl. Yes, that's an early sign, but if the market can come down impulsively with momentum and kind of break some of these levels internally, that's that confirmation. That's confirmation number one, right? Then obviously we don't trade at the very bottom because the risk reward ratio doesn't make sense, right? So naturally, what we want to then see is for the market to pull back, right? Now, if the market pulls back correctively, that's like confirmation number two, which is perfect because then that's where we're going to look to execute our trade to the downside, right? So you can see the phases of what I'm looking at, right? The crawl is kind of like early sign. The first impulsive leg is the level one confirmation. So obviously, if you're aggressive, you'll be looking to capitalize on this leg. And number two, the pullback correctively is my second level of confirmation, right? Now, of course, the internal details of like, oh, we have a liquidity sweep, we have some fair gap. We have the corrective pullback into key areas. We have the internal liquidity that we look out for as well. So those are like just the finer details of things, right? But in general, that's what we want to look out for. Okay. Yeah. So that's the components of a reversal trade that I will want to see before kind of executing it. Okay. So again, you can see like the different aggressive mode, if you put it that way, then the different phases of which you're going to look to execute a trade. Okay, so hopefully that's clear. Calvin asked about the UK oil. Okay. Okay, Brent crude oil. To be very honest, this is kind of gonna be similar to the comparison of S&P and Nasdaq. They're more or less like the same in terms of pattern structure. Yeah, so you can see here, Brent crude oil is essentially going to be very, very similar to crude oil, right? Sorry, Brent itself is very, very similar to crude oil. So the expectation is just going to be 1, 2, 3, and then look for upside, which is basically what we cover in crude oil. Okay. Yeah, so the expectation is basically 3-wave corrective move, and then we'll be expecting one more push to the upside. Okay, so this is on Brent. Then we have another pairing here on the euro, pound, and dollar franc. Sorry, euro, yen, and dollar franc, right? So, I mean, dollar franc generally, you probably saw the analysis just now, right? So that's essentially what I'll be looking out for. Euro, yen, probably going to be very, very similar to all the yen pairs downside, right? So in this case here, there's this gap, right? I wouldn't be too ambitious and kind of target, the entire gap being closed. There's a possibility of that happening. But the bare minimum kind of expectation is just going to be something like that, right? Where we expect, if we can get a pullback, we'll be looking at sell side, right? Which is very, very similar to odd yen, pound yen, or even dollar yen, right? Yeah, so the yen pairs are just generally going to be the same. Again, if you're trading more than one yen pair, just bear in mind of your total risk exposure in terms of market correlation. Okay. Okay, Calvin has another one here on Euro Canadian. Euro Canadian is probably going to be expecting more downside, right? I mean, the market is reacting off this, but it's not bouncing back up impulsively. So the expectation of this here is something like this, right? Again, this one I think I shared, right, on a high time frame. This is looking very crawlish. There are a couple of areas that we can look to target as the market comes down. right? So you just want to be careful that this can be a true wave move. This pullback, if the market wants to go deeper, it can break this high first before going lower. Okay. So while I'm drawing this, it doesn't necessarily mean the market's pullback is just going to stop there, right? So in one of the guideline in terms of Elliott wave is that whenever a 3-wave move is complete, you would naturally expect a deeper pullback. Okay. So what this means is that if you're going to take 50% mark, you can see basically as I mentioned, right? You're not going to be surprised if the market takes out that high. Okay, so if you want to extend this would probably more like something like this, right? Okay, but the directional focus on EuroCAD is pretty straightforward. We'll be looking at downside as long as this high is going to remain intact. You're going to be bearish focused, right? But of course, it doesn't mean you can't trade the upside. It's just that if you have a setup to trade this upside here, just bear in mind it's more of like a pullback trade, right? So that's the idea behind. Okay. Gold, I think we did cover earlier already, so probably not gonna go into the details of things, but I'm just gonna reshare, the charts here for you. Short term, we are expecting this pullback, but for me, I'm not really interested in trading this pullback because of how corrective price development is right now. All good. Okay. So generally, that's what I'm looking out for. Okay, we see one more here in Euro Pound. Was it in the short? But it reversed. Euro Pound. Okay. Yeah. So this one here is a classic kind of You have this little, okay, if you go down to a lower time frame, right, you would see this more of a little double top, right? And then you have the neckline broken, very impulsive, all very great. That's the part where I mentioned, if the pullback is not corrective, then you don't have the extra layer of confirmation. Now, does this mean this trade on the sell side will not work out? No, right? It's just more like you want to be very familiar or clear, like what are the conditions you need to be comfortable in executing the trade, right? Because today, if I have some sort of a double top structure, okay, and then the market make an impulsive move down, the double top is a pattern, it's an early indication, same thing as the crawl, right? It's an early indication. This impulse leg is the first level of confirmation. But of course, we don't just sell it there, right? For me, I don't just because of this, I'll just put a pending limit and then wait for the sell. The second confirmation I would love to see is the market pulls back correctively. Okay, because if the market pulls back so sharp like that, I'm just not comfortable in executing that trade. Right? But again, as I mentioned, it doesn't mean the trade will not work out. It's just not something that I'm into. Okay. So this is the second confirmation I would like to see. Okay, so Euro Pound is a very, very good example to illustrate that. But of course, does it mean that this downside will not work? Not necessary, right? Because again, based on structure perspective, right? So we don't talk about this one candle thing. But if you talk about how the overall structure here, you can see internally here, of course, you have that. So this is a bigger W. This is obviously your X, right? It's a pullback wave. This can be a Y, which means that if this tree wave is completed, this pullback can potentially come back somewhere here, right? So that would generally still be the expectation, right? So the details of this is more like what is the conditions, what are the criteria you need for your setup. Okay, because what I've illustrated over here is more like the directional bias, right? The overall structure, what are the anticipated direction. But the details of like where to get in, are the conditions fulfilled for you to get in, that's the setup phase, right? And the setup phase is again really depending on individual traders as well. Are you going to be more aggressive or so, right? Yeah, so that's my take on the euro pound side of things. Okay, if you want to be a little bit more specific, I would say like 8740 would be your first expected target for this pullback trade, right? I mean, if you're looking at this, the first layer, of course, is anticipating that this is just a pullback. Okay. Good. So yeah, I hope today's session has been helpful, right? At least in terms of like preparing for the week, what are some of the things to have it in your watch list, and of course, hopefully answering as many questions that you guys have as possible to help you prepare for the week. Okay. So that's all that I have for today's session over here. All the best, and we'll see you guys in next week session. Okay. You guys, bye.